indicators list, and which is called the Ichimoku there. Let me just show you the two differences. I believe it's just the colors. Let's go to my green and red background. Okay, so let's take the first one from the main indicators list, and that's what it looks like. Now, if you're colorblind, I do apologize if this screen looks really bad, but don't worry about it. I'm going to adjust the colors in one little moment. That's what it looks like for the normal indicator from the indicators list, but from the customs one, I think you get more values and what have you. And the only difference really is in how the lines on this area here are actually colored in with solid lines rather than perforated lines. Okay, so what I would recommend for you to do is just to really choose one or the other, and for this particular purpose, this video, what I'm going to do is going to concentrate on the custom indicator Ichimoku Hyo, which is this one here, and then just drag it onto the chart. Now, these colors might not make any sense to you right now, so let's go ahead and change that. Okay, so I'm going to double click on one of these colors here. Now, I know if you're colorblind, it's going to be pretty hard to follow on your own, so just be a little bit patient for us while we help these guys out. Okay, so we want to go to the blue sets. It says sandy brown. The sandy brown is actually represented by this little line here. Okay, and sandy brown also comes on that side as well. So what I'm going to do here is I'm going to change this sandy color, brown color, to something different, that so we can actually see what's going on. I'm going to actually change this one to red. Okay, and I'm also going to do the same thing with number 5. So if you're following along with me, choose the number 2, choose red, okay, and then come down to number 5, alright, and then I want you to double click on this section so you get a drop down box, and I want you to navigate over to the red area, which is right here, alright, and click on that one. Alright, now the thistle, we can go ahead and click on OK, and we can now see that these colors have now changed. Alright, so we might need to make some more modifications. So I don't want this area here of these solid horizontal vertical lines, I don't want those to be that color. So I believe it might have been this one that made that color like that. So what I'm going to go ahead and do is choose blue for that one and see what happens. Alright, okay, so we've chosen the wrong one. Alright, so I'm going to go ahead and leave that as red for now, and I believe this one might need to change. Just change that one around. Okay, that looks better. Alright, so blue is to let us know that we're going up, we're going higher in price, we're going long. And I want to color this one red. Let's do that one. So I believe it might be this color here, number 3. Let's go to number 3 and let's choose red for that one. Okay, great. So now we've got all of this filled in as well. Alright. And this also, now this number 6, I think what we'll do is we'll color this a dark color. Let's color this one. What color could we do this one? It doesn't really matter really. I'm just trying to think of a color for colorblind people could use. Maybe we could choose this purple, dark deep pink, because I believe, dark violet. That should come out okay. Alright, try dark violet. Alright, so we can see the outskirts of this line. Okay, the next thing we want to change is this color here, which is the lime green color. This lime, number 4. What I want to do is change this one to black. Okay, so here we are. This is how your chart should look. I want your 0 to be red, and it's actually labeled red as well. Okay, just in case you choose the wrong color. Number 1 is blue, number 2 is blue, number 3 is red, number 4 is black, number 5 is red, and number 6 is dark violet. Alright, and I want you to keep your colors like that. Okay. Now, from the standpoint, I can tell you right now that this video is going to probably be about 20 minutes, 30 minutes in length. Alright, so I'm going to cut this video up into smaller portions. Okay, so alright, let's just move on quickly. Okay, so where can I show you first? Let's take you to the 4-hour time frame first of all. And what I'm going to do is I'm going to actually right click and I'm going to choose template and save template. And I'm going to use this one so you guys can actually download this and apply it to your templates folder. Okay, let's call this Ichimoku Ichimoku. I think that's it. I'll just call it like that, Ichimoku. Alright, so now we've got the templates cut to save, so you're just going to apply that on there now. Okay, so see if we can find an area where we can actually produce some buy and sell signals. Alright. Okay, so the currency prices, first of all, home in on the currency prices, alright, the candles, the green and the red bars, home in onto those. And then the next thing you want to take a look at is to home in on these blue and red lines. Okay, you see these blue and red lines here. If I hover over this one, this will actually say, I think it's a Tinkin span, the Tinkin sen, alright, and this one here is called the Kinjun sen. Okay, well, excuse my pronunciations if I'm not getting them correctly. Okay, and we've got over here the black line here. This one's called the Chinku span, and then we've got these perforated lines on here as well on the outside, and on like there's the bottom part and there's the top part of it, and these are actually referred to as Senku span A and Senku span B, and these represent support and resistance levels. Okay, the way they've actually plotted these on the charts is really weird. So I'm not going to get into the reasons why they plotted them like 26 ahead or 26 behind or what have you. I'm just going to try and just show you in this particular video on like how to find areas to go long and go short on. But let's just say that these areas here, these are called the clouds, like with the dotted dash lines in them. Okay, all of these are referred to as clouds, and the Japanese name for them, I believe, is called Kuhmo, a Kuhmo cloud. Alright, and there are probably about 5 different ways that you could use this particular indicator to find a buy or sell signal. And the first one I'm going to show you is a sell signal. Okay, and the sell signal appears when you see these two lines, the red and the blue one, and that's what we're focusing on. So we need to go ahead and take off our auto scroll, and I'm going to try and find an area in the market where they actually cross. Okay, here we have a section right here, and we can see that the currency prices, the candles, are actually below the red and the blue line. Okay, and you can see that the point at where they crossed over was right here. Now it's very important. Now I want you to take note of this. It's very important that when you're looking for a sell trade opportunity, that the currency prices, the candles, need to be below the red and blue line, but also at the point at which it crosses, which is right there, you need to be ready to open your trade. When it crosses right here, you need to go short on the next bar. Okay, short on the next bar. Now the candles also need to be below the Kuhmo. Very important. The Kuhmo is here, which is the cloud. Alright, and we can see the two crosses over right here. So rule number 1, currency prices are below the cloud. Yes, they are. Rule number 2, does the Tinkin sen and the Senku Kinjun sen cross over? Yeah, do they cross over below the cloud or right on the cloud? Yes, they do. Now, when I say right on the cloud, I don't mean in the middle. I mean just on the edge, right here. All right. And yes, it does. It crosses right there. So that's rule number 2. Rule number 3, get in on the next bar. Rule number 4, when to get out of this trade is when they cross over again. You see where this blue line and this red line crosses above the blue, that's your time to exit. So we would have got in here and exited somewhere along this bar. It could be down the bottom, it could have been up the top, so let's just bisect it. And that would have been for 339 pips over a 42 bar period, which is 160 odd hours. So that's about a week, and that's normally generally around about the time span that you would leave trades open for 4 hour time frames or higher, anywhere between like 5 days or longer. So now for a buy trade, now let me just go over this again. Alright, Kuhmo cloud, clouds need to be underneath the Kuhmo cloud, plus the crossover needs to be below the Kuhmo cloud or just barely on the outskirts of it. Alright, and then go short on the next bar. Now, based on that entry to go short, can you let me know, just pause the video for a couple of moments so you can think about this and let me know what you think a buy trade would be. Is it the opposite? Okay, if we was to say the opposite, we can see one right here. So would we go long at this particular point? Well, you might be saying to yourself, yeah, we could go long because the currency prices went up. And we got a cross right here, right? And you could say, yes, well, it did go up. The currency prices went up because, you know, if you can remember, you know, you could have said, like Loz says, so, you know, once you see the signal, it's going to keep on going in that general direction. But is it? Do you know it's going to go in that general direction all the time? But you don't really know. Alright, so we need to really make sure that when you're looking for a buy trade, we do have to do the opposite, but the opposite is where the candles need to be above the Kuhmo cloud this time. Alright, so let's go ahead and take a look for another buy opportunity. Okay, so here is a section here where we've got the crossover, and this crossover actually appears below the Kuhmo, so that's not good. We can't work with that. Alright, and even though the currency prices still went up, but we could have acted off of this trade by using a different signal, but for this particular signal that I'm trying to show you, it's not going to work because this crossover here is below the Kuhmo. Alright, so we need a crossover that's above the Kuhmo. Alright, here is one where the crossover, okay, where you've got the Tenkan-sen and the Kijun-sen have actually crossed over inside the cloud, so that's no good. We don't want that one. Alright, let's keep on scrolling until we do find a buy trade. Okay, here we go. Here is the Kuhmo cloud. The currency prices are above the cloud. And now we've got a crossover that happens just very, very close to the Senkou span A or Senkou span B. It doesn't really matter. But it's very, very close to this top line, which is what we want. And then we can go long on the next bar. We go long right here. And then we exit out of the trade when it gets up to this point here. Right, when it crosses over again. So we get in on here, which is basically where I actually bought this trade previously, and we get out right there at 132.23.6. Alright, and that would have yielded 294 pips. So that's a buy trade, just using that particular trade setup. That's signal number 1 for buy and sell signals. The second is the Kuhmo Cross. Now the Kuhmo Cross is basically, as it sounds, these clouds are referred to as Kuhmos. Alright, K-U-M-O, Kuhmo. We've got a long Kuhmo cloud and we've got a short Kuhmo cloud. And when they cross over each other, like here, this is where you prepare to go long. Okay. Now, when you take a look at this Kuhmo Cross, you've got to count 26 bars back. So, I'm going to get my crosshair tool out, and I'm going to place it at the point where I feel that the crossover is. Now, we can be plus or minus 1 bar out, but try to be precise as possible, and I think it's about there. Now, 26 bars. Now, how do you know how many bars it is when you move it to the left? Well, it's the first number on the left-hand side. We've got 18, and then 4, 3, 7, 8, and then 1.27619 there as the figures. It's the first figure. It's now 19, and now it says 22, and now it says 33. We want that number to be 26. So we come back all the way over to number 26, and there's number 26 right there. Okay, and what we want to do is go long only if this black line is above the 26 area. It needs to be, basically it needs to be above the cloud. Alright, so where's 26? There's 26 here, and that's how far away it is from the cloud. So that's good. We can go long at this particular point. Okay. And you just go ahead and use other technical analysis to work out where you can actually close the trade. Alright, now here's a crossover here, and you might have got a little bit nervous and you might have closed out of that trade. But when you see it cross over for the first time, you should be okay. You should might make a fair few pips out of it. Let's say over here to there. Let's take a look to see if there is actually a support line up here. You can go back over a little bit, and we can see there is a bit of support and resistance levels there, so that works out okay. Oh, I think I just lost my spot. Alright, okay, so here is another Kuhmo cloud, and where it crosses, so we want to try and go long at some point. So it's come back 26, and it's actually above. Okay, so that's good, and we would have actually probably gone long in and around about here. Now again, I mean, your stop losses, I mean, you're going to be a little bit nervous trading off the 4 hour, and different strategies you're going to be more nervous. That one there with the Kuhmo breakout and looking for the Kinko span, for it to break out, it needs to have broken out after the 26 periods, and if it has, you can go long. And when you use that particular setup, you need to be careful as well and not close the trade out too soon, because it does take a while for it to get into the area where you need it to go. Alright, that's the second one, the strategy. The third one is it's a Kuhmo candle breakout. Okay, and the Kuhmo candle breakout is where you see the candle breaking out here, and then eventually it goes long, and when it breaks out here, eventually it goes short. But when you're using this particular strategy of the Kuhmo breakout, when a candle breaks, again, you need to sort of look at this particular point where you would enter the trade and then say to yourself, okay, is this going to be an immediate support or resistance? And how can you find out without drawing these lines in? Well, the answer is pretty simple. You see how these Senkou span A's and Senkou span B's, this one here is a Senkou span B, and you can see how it's gone in a straight line. And you can see here as well where it's gone in a straight line, and then you can see where the Kinko Seng has a straight line in them as well. Well, these are referred to as equilibrium levels. Now these equilibrium levels, the guy who designed this indicator is a genius, because this particular equilibrium level is basically a floating support or resistance level. It will always come back to that level. Alright? Always come back to that level, but when it will come back, it's not known. Alright, we can see here that here's one Kinko, here's the equilibrium level right here. If I go ahead and place the line tool on there and come back over, you will see eventually, I think it got broke. Where is it? Where did I draw that line in? Was that the line I just drew in? I've lost my space again. Okay, here is that line right there. Okay, well that line didn't actually get hit, so my bad. I've lost my space again. Alright, okay. So yeah, normally they will get hit, but for the most part, but sometimes again they don't. It really depends. I mean, like here's an equilibrium level right here, and later on it does get hit. And here's another equilibrium level here, and then later on it does get hit over here. Here's another equilibrium level here. So when the market drops below the Kinko Seng, we then look for areas like this, these straight lines, and these can be used as our take profit levels. Alright, so when we're looking for the cloud breakout, the Kuhmo breakout, here's a breakout right here, and then I will take a look to my left and I will see if there's any equilibrium levels, and here's one right here, and I would use that as my first take profit level. Okay, so here's the breakout, go in on the next candle, and then boom, Bob's your uncle, your take profit gets hit. Alright, let's take a look for another one. Here's another breakout right here, and we look for an equilibrium level. Here's our breakout. Our first equilibrium level is there, and our breakout was here, and on the next candle our take profit does get hit, but that's 60 pips. You might want to get more, and you may have actually put your next equilibrium around about there, but you can see how long it took for this particular trade to go up and hit that target. Alright, it took all the way up until around about here, which was like 200 hours away. Now, do you have the patience to wait 200 hours? This is something that you would need to persevere with when you're studying on your own. Alright, you might be a person that does, work during the day, or you might be a home mum or a home dad and you don't really have the extra spare hour to monitor your charts. You might only have a spare 30 minutes or an hour in between dinner and whatever you do with your family, or if you're out doing night work. This kind of indicator right here will be perfect for you, because not only does it allow you to look at the chart for 5-10 minutes and see where it is you are at this particular point in time, like right now. What's going to happen, it's going to touch the top of this this line here, which is the bottom part of the Kuhmo cloud, and this Kuhmo cloud is Senku span A, and this will represent, because the currency prices are below the Kuhmo cloud, this will represent a floating resistance level. So what would possibly happen here is it will go up and hit this line, and then it would drag, come back probably down to around about this level, maybe test the bottom part of this support on the left here, and then eventually it will start to break and bite inside it and possibly break out above this Kuhmo. Above this Kuhmo, but this is an equilibrium level as well, so it's a point where the market is trying to pull back towards. Okay, so I've got to be careful with this one, and I might have to just take the profits and run with it, or I can move my stop loss up higher. I'm booking more profits, and then just give the trade some breathing room. Okay, now if I was looking for a sell trade opportunity, then if the prices were at the top, you will see it will come back and float along the top part of the Senku span, and then it might pierce off and go the other way. Alright, and also while we're here, let me just show you, I think this one, let's just take a look, that one's still fine. Okay, well here's a crossover right here, and this is basically to let us know to go short, and we count 26 bars back, and this is actually below, so that's okay. So this, I would imagine that this is going to probably go up a little bit more, and then it will reverse and come back down a little bit. Alright, so I might actually just close this trade out. Okay, let's see if there are any others that we can look at as well. Let's just show you some other examples. Here is a Kuhmo cloud breakout right here, and then we can target an equilibrium level, which is right here, or we could target this equilibrium level on this blue line right there. Okay, and eventually you can see where we break out from here, and our Kuhmo line was there, equilibrium line, I beg your pardon, was there. So that's 60 odd pips. It's for a total of 200, but it does eventually get hit. But that takes quite some time for that to get hit. It's like 50. That's the one we just talked about. Here is another one. I believe that we talked about this one before. Alright, we can see there the red line goes across the blue, plus it's above, the crossover happens above the Kuhmo cloud, so we go long, and then we wait for these red and blue lines to cross over again, and then we close the trade out. We don't go short right here because the currency prices are still above the Kuhmo cloud. We wait for these two crossovers to actually appear below the Kuhmo. But this time we actually have a Kuhmo breakout, and we can actually go short here and then target this equilibrium line right here, and it does get hit. Alright, let's see if we can find some other areas we can take a look at. This is another Kuhmo breakout, that's actually above. So that's fine. So it's a trade, but eventually it goes up. It takes a while for that one to work out. Alright, I think that's basically really about it. So just remember that whenever time you see straight lines like this and the currency prices are above, you can always be assured a majority of the time that they will come back and retest.